Ryan Reynolds here from Mint Mobile. I don't know if you knew this, but anyone can get the same premium wireless for $15 a month plan that I've been enjoying. It's not just for celebrities. So do like I did and have one of your assistants switch you to Mint Mobile today. I'm told it's super easy to do at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Reality radio for a really great future. We're talking real money.
'Tis the season to accomplish nothing. Fa la 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 la. Gotta hate it when 2 holidays fall on Wednesdays. I just wrote that song just now. Can you tell?
I believe you just did, yes. I would copyright it immediately and throw it right out soon.
Have you noticed the world feels weird when you have Christmas on a Wednesday and New Year's on a Wednesday? It's like, I feel every day feels like Sunday or something. I go, isn't it Sunday today? I
hate to complain, but as a business guy, really 2 greatest wasted weeks in the history. I know it's not a waste because you're having fun. I had a great Christmas season.
No, it's a waste.
Really.
No, it's a waste. See, I don't mind saying it's a waste. It's a waste.
All right. So
it's a waste. I mean, it's like New Year's Day. What kind of a holiday is that? I don't get it. You don't even really celebrate anything on New Year's Day. You get drunk the night before, and then you sleep off your hangover.
There you go. There's a reason.
All right. Bah humbug. Hi. Live from New York.
That's true.
It's half of Talking Real Money.
Not the better half, that's for sure.
Well, it depends on your perspective.
Okay, true enough.
Depends on whose wife you ask.
That's good.
Mine might say the better half.
Oh, I'm sure.
I don't know.
She would. I'm certain she would.
Well, I wouldn't count on it, but that's why I said might. I don't want to count on anything. Anyway, hi, I'm Tom. No, he's Don.
What?
No, wait.
Come on.
Okay, I'm Don. That's Tom. Somebody's in New York. I think it's me.
That's you.
And we are actually here. That's why I mentioned the Christmas New Year's thing, because you may think we're like fake, but we're real.
Nope.
You can call us today and get those nagging into the year money questions answered. Get on the right track for a new year. And in addition to getting answers to your burning questions, you will also get a free ticket to the retirement event of the year coming up in 2020, Retire Meet 2020.
And
free.
How do they do that?
They call us.
What's the number?
Oh, yeah. That would be 855-935-TALK, 855-935-8255.
Okay. And we need to be honest with ourselves on the show today that we are really...
Are we not usually?
Yeah, we kind of are, but today especially because, let's be honest, we're just the placeholder for the return. Really? I mean, we're just waiting for the return.
For the return of... What are we waiting for the return of?
Oh, come on. Everybody in Seattle's holding their breath till tomorrow night for the return of Marshawn Lynch. It doesn't... And nothing else matters. I mean, there hasn't been a more anticipated return like this since the Swallows returned to San Juan Capistrano, probably. Or since summer returned to Seattle, you know?
Or Disney put out the Return of the Jedi, the Return of the other Jedi.
Since this is a money show, or the return of the best investment for the 2000 teens, or whatever you call it.
Really?
Right? Yeah. That's
the best investment for the 2010s?
2010s, thank you. I don't know what to call them. I'm glad they're gone because they were hard to, come. 2020 is easy.
Corn futures?
Nope.
Bunyan futures?
Keep going.
Yeah, I got corns and bunions in.
You're doing well there. What is it?
I'm thinking, what could it be? It's not stocks. I mean,
well, it could be a stock, but no, not that I know of. No, not one stock.
I'm trying to think of what it could be.
This investment turned $1 into $90,000 in the 2010s. $1, 90 grand, according to, by the way, Bank of America. So
I might as well not prolong the agony.
You're going to hate the answer. You're literally going to hate the answer.
I hate most of the ansers you give to these kinds of questions, but go ahead. Go ahead. This kind of question, not all your questions. Bitcoin.
Fractions of a penny, Bitcoin, and now it's trading, I think, somewhere around 7,000.
But just think, you would have turned that dollar into like $200,000 if you'd sold out in 2018.
Well, that's true because it was at 20,000 and now it's at 7.
Yeah, exactly.
Right?
So
that's true. Yeah, your timing would have
so
been
you
better.
really took a big hit. But I got to tell you, I'm having an issue. I'm having an issue with the whole concept of putting money in Bitcoin investing. I mean, if you're going to call putting money in Bitcoin investing, then enough. I have you beat. I don't have you beat. Actually, what's her name? I'm going to give you her name. What's her name? Where'd she go? Marilyn Dumoulin of British Columbia, Canada. Mm-hmm. She turned $1 into $700,000.
Whoa.
With one pull of a slot machine at the Treasure Cove Casino in Prince George, Canada.
Yeah, well, my first problem is I don't get to Prince George that often. So,
well, you missed out. She put $3 into a slot machine.
She put 3, and how much came out?
$2.1 million.
Okay, I'm changing my summer vacation plans.
$2.1 million.
Whoa. So you're equating Bitcoin to the random one-armed bandit pull?
Yes, you are right, sir. Yes.
All right, fair enough.
Yes, yeah. I would say you are correct. Yes, because Bitcoin is really it's just air.
You're not going to get into Facebook's launch of the Libra digital currency? No?
Oh, come on. I don't even think that's going to happen. I think Facebook has so many other issues. It's like,
in the hole,
dude,
baby.
Don't tick Congress off with a cyber currency, cryptocurrency yet. Just chill. 855-935-TALK, our number.
Tom and Don are talking real money.
Do you know what your investment risk tolerance is? Take our free no-obligation risk quiz at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Got a question? Does it have something to do with money? Well, we're your guys. I'm Don. That's Tom. We're the Money Show on Como and on the internet. And it's free to call us at 855-935-TALK, 855-935-8255. I'm in New York City visiting my mom. Tom's in the studio in Seattle. Right?
I am indeed, and I'm waiting for Marshawn Lynch.
Everybody is.
Everybody
is. Manda Factor, the anchor in the morning on like Christmas Eve. Was it Christmas Eve?
I think it was
Christmas Eve. Yeah. I do the morning financial reports, the market reports, and Manda just forgot about me because she said she was distracted by the fact that Marshawn Lynch was coming back.
It's like, what is it? Is a comet coming close to the Earth or something?
It was a gravitational pull. It actually trumped Christmas for her.
Wow. Well, she's
Christmas.
She's a big Seahawks fan. I know she went down to L.A. to see them play the Rams. So that can be
I tell you, there's just nothing like Manda in those lime green stretch pants. And
I'm going to let you say that on the air. Good luck. Woo!
I'm in trouble. I hope Manda doesn't actually listen. She said she did on Friday, but I hope she doesn't. I was kidding, Manda. I've never seen you in lime green stretch pants. 855-935-TALK is our number. 855-935-8255. And before I dig myself an even deeper hole, Jim's up. It's your turn to make fun of people. Jim, welcome to Talking Real Money.
Hey, Jim. Merry New Year. How are you?
Hi, thank you very much. Good afternoon.
Hi.
Two questions. First,
two questions.
You were talking about gambling, and you talk about gambling a lot with investing. You equate the two. Here's my question.
Yeah. Yes.
I sometimes talk about the state lottery, and I have two things. Which do you think I should use, and which would you agree with more? First, I say it's a tax on the poor because so many poor people buy the lottery tickets compared to people who are well off. And the other one I say it's a tax on the stupid because you if you want to gamble, anything is better than the state lottery. So, you guys have any thoughts on?
I'm going to St. George. BC, for my 2.1 million or whatever. Big George, Prince George.
I'm not a fan, but I think. By the way, we were talking about. I think the casino in Canada is not state sponsored. I struggle with state sponsored gambling. I have since it been started in the 1980s. I just don't think it's a good idea because we did a story a couple weeks ago about how the average person, still hard to believe, the average person in America spends like $1,000 a year on lottery tickets. Why are they buying them? Well, they're buying them because they're hoping they're going to be that one person that pays the $3 and gets the whatever million.
Actually,
right?
they're doing it. They actually, I'm telling you, the thinking is, and this is where I want to vote for tax on stupid, because, and I think we should vote on one or the other, tax on the poor, tax on. I think it's a tax on stupid
next year. Sorry, go ahead.
I think it's a tax on stupid because you ask I've seen interviews where people are asked, why do you buy lottery tickets? Because somebody's going to win. Why not me?
Yeah. But it's the get rich quick aspect that I hate of it. In other words, I'm doing this and do I think it taxes people who have less money? Sure, because they probably are bigger spenders of that in ways they can't afford. I bet Bill Gates does not buy a lot of lottery tickets, even though that's not a great example. I haven't bought one in 35 years.
That's what that's what I said the last time we talked about this story. I'm going at $1,000. If people are spending $1,000 a year, then there are a bunch of people way over that to make up for me. Yeah. Because the temptation doesn't exist for me.
It doesn't do anything. And by the way, even when I go to Vegas, I really only go there now for the shows and for the football, of course. But
no, you have not yet adopted the Don McDonald.
Yes, I know the 2-drink special.
The Don McDonald guaranteed winners strategy in Vegas.
Go ahead.
Guaranteed to win money if you get a few quarters. Usually it's $20 in quarters. Now, my wife and I do this together, so it's a social event.
Okay.
We can talk and hang out together. We go to the bar with the poker machines, and no matter how great the temptation is to put 4 quarters in to increase your return, you don't do it. Because the point is 1 quarter at a time. The point is to stay at the bar for the duration of your date with your significant other, or so that you get free drinks while you're gambling.
Yeah.
And by the time you're done, you've gambled $20 and you've gotten 2 or 3 free drinks each.
Okay, that's the other part of the equation.
You made money.
I really am not a drinker. So then how does it work for me?
Well, even then, if you're getting
I'm not really a whole lot of fun either.
How much is a Coke? It's like $3. So you get
fair enough. By the way, I want to finish the thought what Jim asked, because he said we're equating gambling with investing. This is a very important point. When you invest properly, widely diversified index style or index mutual funds at relatively low costs and a lot of stocks, that's not gambling. That is you're investing in companies that have not necessarily great futures, but a lot of them will. When you're gambling, the odds are on the house's side. That's not true in investing.
Right. But
I think what Jim
meant is that we call a lot of things that people think of as investing.
True.
Speculation or gambling.
That's true.
Because the reality is that so much of what you do with your money that you call investing isn't.
Well, okay, that's an easy one. That's owning individual stocks. I still see people come in the office every day that have a company they believe in. Often it's the company they work for. Yep. We had one recently. A person works at Costco. Do you know what Costco's up this year to date? I looked it up.
A lot.
42%.
Wow.
And I had to tell that person they should be selling out of it. How popular was I? I mean, what am I, an idiot or something? I got all this Costco's going straight up.
But here, just make sure everybody understands what Tom just said. He is not telling you to sell Costco because it is high. It's that you can't expect that. It's just it could go even higher. Probably will, but we don't know.
By the way, the longer you hold a company stock, the riskier it is. It has to be, because the longer a company's around, more bad things potentially can happen. So,
but what you're really talking about, and I don't want people to confuse what you're saying with what we hate, which is trying to predict. You're not predicting
we'll get
that
into
Costco's
that in a
going to go down.
Minutes here, because there's a lot of them predictions going around right now, my friend.
I hate this time of year for a variety of reasons.
So
one of them is predictions. The other one of them is year-end synopses. Like, it's bad enough when we have a year that doesn't start a new decade, where it's like, the 20 things that happened in 2017.
You don't like it because somebody else is compiling those for you and you'd rather do it yourself?
No, I'd rather not look back. That's the past. It's done. Thanks. I already heard.
Really?
I read about it already.
You're a history
I already
guy.
know. But not the history of last year.
Okay, where does the line be drawn then?
I remember last year. Tell me about World War I. I'm going to go see 1917.
Oh yeah, I'm looking forward to that. Yeah. So
tell me about that.
Right, fair enough.
Tell me about Lincoln.
I do want to see that one about the 19th century balloonist too. That's on Netflix.
It's on Amazon Prime.
Okay,
excuse me. It's on Amazon Prime.
All I do is say it into the thing, and it puts. Anyway, I don't know what channel it's on.
The Aeronauts.
Yeah, I want to see that.
Yeah, I think that's it. 855-935-TALK is our number. Give us a call.
Don are talking real money.
Download the advisor interview form and find out if your advisor's a fiduciary at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
855-935-8255 is our phone number, 855-935-TALK. You get to ask questions, and we get to give you answers. And most of the time, they're going to be well considered and generally accurate, but sometimes we mess up. Can't promise anything. 855-935-TALK, 855-935-8255. It's free. It's really, really, really easy. And by the by, you will, for calling the show and asking a question, get a free ticket to Retire Me 2020. Or you can get two of them. And there's somebody calling right now.
Call them.
Or you get two of them for $5. You and another person can go for $5.
It sounds like a long time from now, but it's like 7 weeks, and it'll sell probably in about 4 weeks. This is
it will sell out.
This is the last weekend for the lower prices, which are $10 a head or $15 a couple, which is ridiculously inexpensive.
Right.
Prices start going up, and sales start. We're about. What are we, about a third of the way through or something? I don't forget, but it's
about 25%.
Yeah, so it's
about 25%. And this is early for it to be that sold out.
Don't miss it. We have the best lineup I can honestly say we've ever had.
Yeah, Marshawn Lynch is coming back.
No more football guys. You already got mad at me for the last one.
I know we did.
He's back in Seattle. He's back in Seattle.
Yeah. Doing something that won't work out that well for him.
Are we going to say who it is?
Jim Zorn.
Jim Zorn. We invited Jim to
say
speak.
Jim
and they asked us ahead of time, what do you want him to talk about? And I said, anything except football stories. Don't do football stories. And
we said, talk about retirement.
Minutes, he spent an hour on football stories. Anyway, that's okay, Jim. So, it's all right. Do you want to go to the phones?
855-935-TALK is our number. Yeah, we can go to the phones if you want.
Yeah,
sure, I'm good with that. That's why we live.
I know.
Okay.
It's 855-935-8255. And John joins us on Talking Real Money. Hi, John.
Hi.
How can we help you?
Say, a couple of weeks ago, you guys were discussing passing money down to your kids and to grandkids for the future, and I got in on just the tail end of your conversation, so I missed a whole bunch of it, and I was wondering if you could maybe clue me in.
Well, I think what we may have been talking about was, I kind of remember a call where we talked about one of the ways you can give a gift to a child with a job, for example, is with earned income, is to, instead of giving them an expensive gift for the holidays, you just give them some money in their Roth IRA. The other thing we discussed a little bit was for younger children, where a grandparent or parent or whomever could set up a 529 account for them, which pays for a post-secondary education or even a primary or secondary education. And we suggest people set those up through Utah's 529 plan, which is my529.com. So
another option is still the Uniform Gift to Minors Act. We may have touched on that. That came up as well, but I don't like that one as well. I'm more of a believer in education in the future. I ran into somebody the other day, said this kid's never go to college. They're like 5 years old.
Doesn't matter. Then they can go to trade school.
That's
they
true.
Can go to trade school,
or the money could go to another child or grandchild within the family. So, but anyway. So.
Yeah, and I got to tell you, though, I really think the country needs to move more toward not putting everyone in college after high
no,
school,
I concur.
but putting these kids, encouraging them to learn a very valuable, saleable trade.
Which one day you may learn too. I don't know when. How much?
I'm still working on it.
How many more years?
I went to the Columbia School of Broadcasting.
I know, John. Does that help?
I did not.
Did that help answer your question? So 529 Roth or UGMA? John.
Okay. Yeah, I know you were talking about something, but I just didn't get it all, and yeah.
That's the only thing I can remember is that we were talking about those things because there aren't a lot of options.
John.
Okay. Well, I'm going to one of the grandkids' parents were talking about that 529 program there just a few days ago, and I thought I would.
Utah 529. If you type in Utah 529 on the Google, on the Google
my529.com is the Utah plan.
Yeah,
my529.com. 855-935-8255. That's our phone number, 855-935-TALK. We have lots of time to spend with you and a ton of really important things we can discuss, particularly getting your life pointed in the right direction financially.
Tom and Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information, talkingrealmoney.com.
Reality radio for a really great future. We're talking real money.
The Money Talk continues here on Talking Real Money. I'm Don McDonald. You're invited to call us at 855-935-TALK, 855-935-8255. And I failed to make something really clear before, and I apologize. You don't have to be named Jim or John to call. You can have other names.
But
it's
there
okay.
does be a pattern apparently emerging here on the program.
Right, there is. So far, we've talked to Jim and John, and
guess what?
Guess what? Yeah. This is not the same Jim. This is another Jim. Jim, welcome to Talking Real Money.
Hey, Jim, how can we help you?
Hi. I guess I tuned in a little late.
No, you're quite all right.
You're right on time.
Hit it.
Okay.
Yeah.
So my question is, I work at Boeing, and we have the VIP fund that we can either manage ourselves or financial engines. We can pay them a small fee to do it. So I've been there about 10 years, and I've acquired about $80,000 in my account. And I've varied the percentages I put in year after year, but for the last few years I've stuck at 8 that the company matches, and then I also do, all in all, it totals out to be 15%. So there's about 10% in the VIP, and then another 5% that I have going into a Roth.
Yeah.
So this is total,
Yep.
Okay.
But how are you investing the money that's going in?
Well, see, that's what I used to do it on my own, and I'd be able to tell you. But now that they do it, I can't follow it as much. I called them up last week and said, "Hey, these are a few things I want to get into," and they're like, "Oh, we can't do that.
Nope.
We structure our algorithms and stuff." And I'm like, So
I
went back and I looked. and I put about $10,000 in last year. Well, that only took me up about $10,000 in the account from what it was the year before. I don't see them really doing anything. And my other question is, I'm wondering about Roth conversion. So I'm curious about algorithms for these financial places. And then I'm curious about, should I be putting more money into my Roth and paying the tax now? And then what is the conversion that I can do at the end of the year, and how much will I pay on that?
I'm going to let Don take up the Roth part, but I'll take up the financial engines. We know financial engines. I have not seen specifically a portfolio of what they're doing in the VIP. So for me to say it's right or wrong is difficult. That said, and I don't think they time it. I don't think because you're talking about an algorithm.
I don't believe that they know.
But my question,
think because it's based on the work of Bill Sharp.
Correct. My question to you, Jim, is, and by the way, for those of you listening who have money in the VIP, if you go to 401411.com, click on specific plans, we have our allocation in the VIP. It's balanced between U.S. and international. It has small in it. The decision,
and it doesn't cost anything.
Right. It's
Ours
free.
Doesn't have any additional cost.
I would have to see what Financial Engines is recommending.
Yeah.
But my question to you, Jim, is are you comfortable managing it on your own and not putting it all in either? Because what we see is people either put it in the stable value fund because that feels safe, or they only own one or two of the, this is the point. And so sometimes I say, sure, it's worth paying them. Are you comfortable doing it on your own? That's the question I'm getting to. Go ahead, Don. He wants to talk
and
about
the other thing, but before we get to the Roth, the other thing that you need to bear in mind is this: holding anyone up to a single year of scrutiny is patently unfair.
Yeah, no, I agree.
You can't judge them by year-to-year performance. But again, as Tom said, I have to see the portfolio to see what they have you in. If you could get hold of that and give us a call, we could go through it, or you could call one of our advisors and they'll help you go through it for free. They won't try to, because we can't manage that anyway. We won't try to manage it. But Roth conversion, let's go back to that. So you're talking about converting a traditional to a Roth, Jim?
Oh, I'm sorry. I didn't explain it very well. So this would be catch up.
Yeah, just putting more money into
not a
the
Roth conversion
instead of into the regular. We'll talk about that when we come back from the break.
Yeah, we'll take a quick break. The catch-up provisions are nice. Having a Roth is great. We love Roths. We love the tax-free aspect of it. We love the fact that it makes actually a pretty good estate planning tool. But you're limited to a little bit in those. But you can also do Roth 401ks. 855-935-TALK, our number.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Planning for a better future, the whole point of this program. That's what we're trying to help you do, and you can call us to ask questions about money at 855-935-TALK, 855-935-8255. We're talking to Jim about a couple of things, his VIP fund investments and catching up on a Roth.
And so, Jim, tell me, how old are you?
I'm 51.
51. And what is your current, roughly your household income, your kind of tax situation?
About 80.
Okay. So,
Good. Yeah, 80 singular.
Yeah, okay. So here's single. What I think for you at the still relatively young age, I can say that.
Now we can't. When I turned 50, I went, this is old, but ancient. Not anymore.
I think you got a great strategy. I think doing part of your money into the pre-tax, as you just discussed, into the pre-tax 401k, the catch-up into the Roth, that gives you several different pots of money to draw on when you retire. Some will be money that you have to pay tax on, some that will be money that comes out without any taxation. So I think your strategy is exactly right. I do think you should look at the website, 401411.com, go to specific plans to see how we believe you should build the portfolio in the VIP. But if you're not comfortable doing that, having somebody like Financial Engines do it, I think, is a great idea.
Okay, see, we went from Jim to John to Jim. Oh, let's go to John again.
Yeah,
John, welcome to Talking Real Money.
John, you're not back. How are you?
Well, if it makes you more comfortable, you can call me Ishmael.
Okay. All right.
That's perfect.
Since we're always chasing that great white whale.
Thanks, Moby.
There we go. Anyway. All right. Bring her in. All right, Ishmael, what do you got for us? Hit us. Or don't.
This is a more of a general issue question and not anything specific.
Okay.
Diversification
sounds more fun.
Is good. Diversification is great. It's absolutely essential. It's the thing that I've seen way too many people screw up all the time because they think, oh, well, I've got this great knowledge of one industry, so I'm going to choose the one or two best from that industry and ignore everything else.
Okay.
You got us so far?
Yeah.
The question is the flip side of that. Index funds are a good way to force diversification. Index funds frequently include investments that someone might not want to be in for reasons other than investment. For example, someone might not want to ever own a share of a tobacco stock.
You can buy index funds that do that, by the way.
Yep. They're called socially responsible funds.
No, there's all kinds of them now.
Well, that's the easy instance. I'm aware of the socially responsible one.
Okay.
The hard question, and this is one I honestly have had no luck trying to research, is how do you deal with a situation where someone is trying to avoid a conflict of interest with something that doesn't fall into one of those easy-to-define categories? For example...
thank you. I was hoping for an example.
We're going to need it.
Here's an example. How about for someone who doesn't mind financial stocks, except that they have a conflict of interest regarding two particular financial institutions? For the sake of discussion, let's just say Citibank and Chase.
Yeah.
That they are lawyers suing those institutions.
But you don't have I don't believe.
Not legally,
and
you
I'm
can
not
still invest in them.
Yeah, because you're not directly investing in them. So you have no voting power. You have no voting power. See, the only conflict that I can see you would possibly have, if you own Citicorp stock, for example, you have, as an individual shareholder, you have a vote. And I can see where, really stretching the imagination, some judge somewhere could say, yeah, well, as a voting member of that group, you have a conflict of interest. But when you own it through an index fund, you no longer have the right to vote those shares. The fund votes the shares.
You do get a proxy vote on who runs the fund. You do get a proxy vote on certain things like that. That's all the control you have.
Well,
so I don't think there's a real
from a voting standpoint. You're probably right. I do want to say that it's not just some judge somewhere that might say that. It's every judge everywhere and every state bar association everywhere.
But in the case of an index fund, though, I find I cannot. I would know of no way around it. Let's start with that. There is no way to create a custom index fund unless you're very, very wealthy.
Separate accounts.
Yeah. But I have a hard time imagining, and both of us have lawyers in the family. We are not, but
thankfully.
I cannot imagine how anybody would say, dude, you have these stocks and you're suing these companies because you own them in Vanguard's Index 500 fund.
It's an interesting conundrum. John, thank you for
I've never heard of it. But thanks for the question.
Let's go back to the phones very quickly before we get to the top of the hour. Vicky, how are you?
Vicky.
Hi, how are you?
Very well. How can we help you?
Okay, this is not a John or Jim. This is a different name.
I know. Well, we'll try to deal with that as best we can.
Okay, my question is, about 9 years ago, I was conned into buying annuity. I invested that time. My money was $545,000, and this is 9 years over. And I calculated I barely made 1.2% return in last 9 years.
Mm-hmm.
And right now I'm planning and thinking about pay the surrendering charge and.
Wait a minute. How much is
Vicky,
surrender?
hang on. There's still a surrender charge after 9 years?
Yes.
How much?
That's $5,500.
Okay, so
all right. So it's a 1%. Yeah. Right. If you wait a year, that'll go away.
1%, almost 0.25% or whatever. But would that be worth giving the surrender charge and transfer this money into Vanguard funds?
Yes.
You have unanimous agreement. We both concur with that decision.
Pay me
it's
now
a
or pay
no-brainer.
me later. I mean, you're just paying.
And it's
all the
not.
costs.
You're not paying much now. I would pay that little bit of nothing and get my money over to Vanguard about as fast as my.
Marshawn Lynch goes through the Niners. Yes.
I have about $759,000 with Vanguard.
Yeah.
Different 8 funds. So That's why my question is, would it be worth switching the money and give the surrender charge and bring the money over to Vanguard?
We'll say it one more time. Yes.
Absolutely. We are absolutely supportive of your plan to go to that filthy, stinking insurance company with a surrender charge after 9 years,
That's
which
outrageous.
leads me to believe that the commission was in the 8 to 9% range, possibly. I would run away. I would have run away a couple of years ago. I would have taken the 2 or the 3 or the 4 or the 5% hit. I really would have, because, as Tom said, it's a pay me now or suffer later.
Yeah.
And you suffered later with those pathetic returns when you could have been, just with a massively diversified stock portfolio over that same 9 years, you would have averaged about 9% per year on your money. So you see what it cost not paying that surrender? Sometimes paying the surrender is, a price worth paying.
Tom and Don are talking real money.
Tom and I believe in helping everybody become a better investor. That's why we offer lots of free knowledge at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
We've mentioned a couple of times the Retire Meet event coming up really soon. It's coming. It's faster than you think. It's February. It'll be here any minute. February 22nd. It's Retire Meet 2020. It's our 6th annual event. They've sold out every year. And right now we have super low ticket prices because it's very early going. You can get a ticket for 1 for $10 or a ticket for 2 people for $15. But that price goes up after the first of the year. So you want to get those tickets now so that you have a few extra dollars to invest, right? So go to retiremeet.com. That's retiremeet.com and get your tickets before the price goes up later in the week or later next week. retiremeet.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.